All right, let's dive into something that's really been grabbing headlines lately, shaking up portfolios too.
Oh, yeah.
Bitcoin and the whole crypto market, really. We've seen Bitcoin hit fresh all-time highs,
Right.
kind of echoing what's happening in the stock market. And then you have crypto equities like Coinbase. They're absolutely rallying hard.
Hmm.
Sometimes these surges feel a bit like a mystery, don't they?
They really can.
It's easy just to say, oh, Bitcoin's up again. But, I mean,
Right.
what's really driving this current wave? What are the specific forces at play here?
It's true. Bitcoin's moves can often seem, well, opaque, hard to pin down.
Yeah.
But this time around, the story feels less like a riddle. It seems more like a unique confluence of factors converging.
Okay.
Truly a perfect storm, you might say. So today, let's really deep dive into what's fueling this excitement, why these shifts fundamentally matter,
Right.
and importantly, what Bitcoin's evolving role means for you, the individual investor looking at all this.
Okay, let's unpack this then, this perfect storm.
Mm.
So beyond just general market optimism, what are the concrete drivers? Where's this capital actually coming from?
Well, a primary catalyst right now is the undeniable embrace from institutional investors.
Ah, the institutions.
Yes, and corporate treasuries too. We're seeing major players actively increasing their crypto exposure.
So it's different from before. Less retail driven, maybe?
It's a significant shift from earlier cycles, which, yeah, were largely retail driven. This feels more structural. I mean, just to put a number on it, Bitcoin is up almost 30% year to date.
Wow, 30%.
Yeah,
Yeah.
that kind of performance, it definitely gets attention from serious capital.
And I guess as these big players move in, we're seeing these new ways for capital to flow in, like the ETFs, right?
Exactly.
That seems to be a massive game changer, especially for the big ones like Bitcoin and Ether.
It absolutely is. The demand for this asset class is just, well, robust, and the ETF flows are a direct, very potent reflection of that demand.
So people are actually using them.
Oh, definitely. We're observing, for instance, BlackRock's largest Ether ETF and their Bitcoin ETF. They're seeing consistent, really strong inflows after inflows.
Okay.
And critically, these significant inflows directly impact the price. It's new institutional scale buying pressure coming in.
Right. It's pure supply and demand.
Pure supply and demand, but on a scale we haven't consistently seen before. This isn't just, retail dipping their toes in anymore. It feels like a structural shift.
Interesting. So beyond the direct investment flows, we're also hearing talk about a pro-crypto administration and things like the stablecoin bill.
Yeah.
How do these broader regulatory, maybe political trends fit into this perfect environment people are talking about for Bitcoin?
Well, that's another key piece. The current climate is definitely perceived by many as a perfect environment for Bitcoin. It goes beyond just the progress on the stablecoin bill, which is significant in itself.
Okay.
There's also this really exciting prospect of crypto potentially being included in 401ks.
Wow, in retirement accounts.
Exactly. If this fully materializes, it's a massive shift in how ordinary Americans could get exposure to crypto. We've already seen some, pretty bullish financial advisors recommend crypto allocations up to maybe 15%.
15%. That sounds high.
It does, and it depends heavily on an individual's risk tolerance, of course.
Yeah.
Then you have more conservative institutions like BlackRock suggesting something more modest, maybe 1% to 2%.
So quite a range there, even among the experts. But hold on, putting crypto in 401k,
Yeah.
I mean, given how volatile it is, that sounds like a big hurdle.
It is.
What are the practical challenges, and does this idea have real backing?
That raises a really important point, especially for long-term retirement accounts. Look, while there might be a directive, say from someone like Trump, regarding crypto and 401k, the practical execution, that faces considerable hurdles.
Like what?
Well, you're talking about compliance with existing financial regulations, for one. Then establishing really robust custodial solutions, for asset security that can stand up to scrutiny.
Security and
And designing risk frameworks that genuinely protect everyday investors from that extreme volatility we talked about. It's not just a, can we do this? It's really a, how do we do this safely and responsibly question.
makes sense.
Which is why even those bullish advisors suggest pretty calculated allocations. But we do see backing from influential figures, including Eric Trump, connect them directly to the crypto industry. So there seems to be strong political will in some circles.
Okay. Now, as Bitcoin matures like this, and it's attracting all this traditional capital, I wonder, is it losing some of its, independence? Is it starting to just move in lockstep with other assets? What does this mean for how Bitcoin behaves in the market overall?
That's a critical observation, actually. We are seeing Bitcoin behave increasingly like a traditional risk asset.
A risk asset.
Yeah, risk assets across the board are edging higher, right?
Hmm.
And Bitcoin is moving more in correlation with them. Ether, too, the second largest coin, it's also firmly in the green.
So it's not off in its own world anymore.
Not so much. It's not operating in isolation. It's becoming integrated into this larger trend where market participants are actively seeking higher returns in a more, let's say, risk-on environment. This is a really profound shift from its early days.
So if it's mirroring traditional risk assets, moving with the broader market, does that really mark the end of the whole digital gold narrative?
That's the big question, isn't it?
If it's not really a safe haven anymore, what is its new identity for investors when they're thinking about allocating capital?
This shift from being seen as a haven play to more of a risk asset is pretty foundational. It means Bitcoin isn't primarily seen as digital gold anymore, that safe harbor when traditional markets get shaky.
Right.
Instead, investors seem to be deploying capital into Bitcoin now to aggressively seek alpha.
Alpha meaning excess returns.
Exactly. Returns significantly above what the broader market or a traditional benchmark might deliver. And this fundamentally changes its role in a portfolio. Well, it's maybe no longer primarily a diversifier, but more of a growth engine, albeit one with higher volatility and, crucially, a growing correlation to equities. So while some people still, maybe sentimentally, kind of see it as digital gold, its actual target behavior doesn't really align with how gold behaves.
Which then brings up that really critical question for an investor, right? If someone were to actually put, say, that 15% of their portfolio into crypto, like some advisors suggest, where does that capital come from?
Exactly.
Are they pulling it out of their stock exposure? Or alternatives, maybe even bonds? How does this asset fit into our established allocation models if its whole identity seems to have changed so much?
That's the puzzle. It forces individuals and advisors, too, to fundamentally rethink those established portfolio strategies. If it's not really a true diversifier anymore, and it's highly correlated with other risk assets, does it still offer the kind of diversification benefits that traditional models aim for? It essentially demands a reevaluation of what a balanced portfolio even looks like in a world where Bitcoin might be seen more as a growth engine rather than a hedge.
Okay, so shifting identity, changing role. What about adoption? How widespread is this really?
Well, here's a fascinating detail. It comes from a recent Bank of America fund manager survey. Only 9% of the investors they surveyed currently have any exposure to crypto. Just 9%.
9%. Only 9. So what does that mean then? Does that low number imply there's still just a massive runway for growth, for wider adoption if all this institutional and regulatory momentum keeps up?
That 9% isn't just a number. I think it's a really profound market signal.
In what way?
It suggests we're likely still in the very early innings of broad institutional and individual adoption. The real insight maybe isn't just that there's room to grow, but how that growth might actually materialize. Maybe through those mandate-driven allocations and retirement funds we talked about, or perhaps a generational shift in wealth and risk appetite. Younger investors who are generally more comfortable with digital assets as they accumulate capital.
Interesting. So potentially a more fundamental shift than just another speculative cycle.
It could imply a more sustained fundamental shift in asset allocation than maybe some of the more speculative cycles we've seen in the past. It really does represent a significant runway if the conditions remain conducive.
So there you have it then. It really does sound like a perfect storm driving Bitcoin's recent surge.
Yeah, a confluence of factors.
We've seen how institutional demand, those massive ETF flows, and this shifting regulatory landscape are all playing a part in what feels like a new era. And it seems abundantly clear that Bitcoin is evolving. It's shedding that digital gold narrative, behaving much more like a risk asset. Becoming this potential growth engine within portfolios.
It's truly remarkable when you step back and consider Bitcoin's journey from this niche, kind of mysterious digital currency, to something potentially included in 401ks, and showing this increasing correlation with traditional risk assets. This evolution, it really demands a critical look at the very nature of diversified portfolios going forward.
So the final provocative thought for the listener then.
Yeah, I guess the question for you as a listener becomes, given all this, how should you reevaluate your own risk tolerance and maybe your investment strategy in light of this really rapidly changing financial landscape? Food for thought.